So when price moves faster, there's less volume that trades at each price. Here's what we had on what ended up being the lows. We had a bunch of longs kick out, and then we had a bunch of shorts kick out here at 43.75. That where the market is. Above here, you're probably going to get sent higher. If they were to get below 38, they would have sent the lower. Now, this guy came in back over here, which was surprising that it took off to the upside, but it did. If it got below it, they would have scrambled this thing lower. This is one of those things like watching a basketball game where the team has a chance to put the other team away, and instead of hitting the shot, they turn the ball over 2 or 3 times down the court, and they had a chance to run this thing lower. And so that was the spot there, and that was the spot to the upside there. So if I fast forward it, as soon as it makes the run there, right there, and runs away from this chop and from this price and from this low of the day, gets above 43.75, and it's got all those shorts stuck, and they're off to the races. And you could see it run through sell icebergs like they're not even there. But they get through that swing high, and they got everybody chasing who's short, wishing they would have covered below. And that's what you need for price to go up. That moment of buyers that are chasing. But let me rewind it and just walk through context. When the market makes a low, like it does in here, it was a lower low from the overnight session. It always has people looking to buy the low, and it always comes back to test them. And they get tested right there at these 38s, right? And then once they start to leave it, you see this is then looked at as the failure of this particular low. But these were pretty decent longs and shorts relative to the day. People get confused. Volume and liquidity are two different things. Volume overall in a day is higher when the market's volatile, but the volume at each price is, at the moment it trades, much smaller because people are leaving less in the book. So there's going to be less open positions at each price because there's less volume trading at each price.